Hey all, Zach here. Let's talk about why, if you're a current homeowner, your home might have appreciated, in a way, a lot more than you think. And if you're a buyer, it might be the right time to get into the market. To understand what's happening, we need to talk about buying power and what it really means for home appreciation and home prices. Buying power essentially captures two things. First is how much buyers are willing to pay for a home in a certain area to get what they want out of a home and to engage with the communities that they want to be in. In Nashville right now, we've really got this going for us. We're seeing people go above and beyond to get into the homes and neighborhoods that they want to be in. The second part of buying power is tied a little bit more to government action and things out of the buyer's control. These are going to be things like property taxes, interest rates, loan fees, the sort of percentage-based costs that are based on the actual price that the home is purchased for. And why that matters, especially for current homeowners, is that interest rates dropping have really allowed people to get a lot more house for the same monthly payment. For example, if you wanted to get a 30-year $1 million mortgage, so you're spending $1 million on your loan over 30 years at a 6% rate, you'd pay just shy of $6,000 a month, which is a whole lot of money. But with today's low interest rates around 3%, and for this we're using a 3% example, you'd actually, to have the same $6,000 monthly payment, you'd have to pay a little over $1.4 million. That's over 40% higher in your actual mortgage to have the same monthly payment. So someone that's willing to pay $6,000 a month can get 40% more house. And that's not just $6,000 a month, that's any price right now. You're able to get a lot higher value house for your money. As a general rule of thumb, for every 1% change in interest rates, you're gonna see about a 10% change in your monthly payment. So if you have a 3% change in your interest rate, you're gonna see about a 30% change in your monthly payment. For current homeowners, what that means is even if your home value has gone way up, if you have an older interest rate, you could actually get a huge reduction in your monthly payment just by refinancing. But refinancing can get a little expensive with all the fees and everything thrown in, so it might be even worth a look at, is now the right time to make a move? If you have an interest rate from several years ago that was up 4, 5, 6%, you might be able to save a lot of money by making a move. You'd have to find out a little bit about what's right for your specific situation and see what's going on. For current buyers, there's no better time to get into the market because you're going to be able to lock in that low interest rate for the whole time you're in the house. If you can find your dream home right now and stay there till it's paid off, you could see that savings for years and years and years, and it's a golden opportunity. If any of that sounds like something that might pertain to you and you want to get specific information for your situation, feel free to shoot me a message, leave a comment, and we can talk about the exact numbers for your situation and if you decide to do a refinance or a move, what that might look like and what might be right for your situation. Otherwise, to get the most out of your current and future home, follow, subscribe, like wherever we're at, and tag along for the future. I can't wait to see you in more videos.